was a large chemical factory fire up in Queensland. This resulted in a cleanup on roughly 18 million.
Because of public sentiment and what was going on in the media, that client was up for well in excess of $150,000 to clear the old mulch and replace it. And at that point, they were uninsured.
Hello and welcome to Insurance Business TV. We're looking at pollution and contamination risks. They've always lurked in the background for insurers, but in recent years they've moved to centre stage with PFAS, soil and groundwater issues and sharper regulatory scrutiny turning into very real balance sheet challenges. So as part of IB's focus on environmental liability in Australia and New Zealand, we're unpacking whether these exposures are becoming the next big coverage gap. We've assembled our roundtable of insurance experts who specialise in this field. Jonathan Frost is Director of Bellrock. He's based in Sydney. And also in Sydney, Andrew Hookings, Senior Underwriter for Liability at Eclipse Insurance. Welcome to you both. Just looking at the last 2 to 3 years, what's changed most in environmental exposures that your clients are facing? Is it new contaminants like PFAS, tougher regulators, or just more claims activity? Jonathan, thanks for taking part, and let's start with you on this one.
Yeah, thanks very much. I think there's no doubt the media are playing a part. There's a significant volume of contamination articles in the press. That's leading obviously to principals being more aware of it when they're engaging their contractors and seeking to transfer that risk via contract, whereas in the past it may have been a little bit silent around contamination or causing pollution conditions. There's now an expectation probably from principals that their contractors should take that risk and have that cover. So I think it's probably just that awareness that's driven driven the awareness in the industry that these exist and should be addressed.
Thanks, Jonathan. And Andrew, what about you? What's changed most for your clients in the last few years in this space?
We've certainly seen the emergence of PFAS, a continuing change of regulation there, the recent enforcement of bans, stricter controls, particularly in the water and remediation standards. This creates much more complex environment for the clients, given it's used in such a broad range of products. Also seen the emergence of the older contaminants such as asbestos and the impact it has on a broad range of industries, as we've seen in recent times. And overall, the tighter regulation as well as public pressure from NGOs and, as Jonathan said, the awareness of pollution issues has opened the door for more claims activity. Certainly in the media, we've seen more and more articles highlighting environmental incidences and the impacts it's got on the environment. And you're probably seeing them article 2 or 3 times a week.
Andrew, let's stick with you for the next question. Where are you seeing the biggest coverage gaps between traditional property liability policies and what's actually happening on the ground now as a result of what you're describing?
We're certainly seeing total pollution exclusions in liability policies and particularly exclusion for specific contaminants or pollutions conditions such as PFAS and asbestos. So it creates the need and the demand for an environmental policy which can cover these scenarios. And it's probably one of the client's largest exposures on their liability portfolio as well. Also, first party or clean-up costs on site, so they're not covered under the liability policy and can be limited under a property policy with sublimits, such as removal of debris. If you think about it, pollution first originates on a client site, on their own site, and then may migrate off-site. So the cost of the clean-up is going to be higher for the on-site cleanup, and this is where clients need to consider that and their impact on their balance sheet.
And Jonathan, what about you? Where are you seeing the most gaps?
Yeah, I definitely agree with Andrew. I think cleanup costs are underappreciated by a lot of the market, particularly those that haven't had any of those claims. But even the gaps around PR coverage, the negative press you receive when something like this happens, whether it's accidental or deliberate, those costs are significant to try and, maintain your reputation. But it really is that cleanup cost where customers might think they have cover for, property damage for sudden and accidental. But as Andrew said, there's exclusions in there for asbestos and PFAS and those types of things, and really nothing in there for the cost of remediating.
Perhaps with that in mind, Jonathan, can you walk us through a recent example, an environmental claim or a near miss, which I guess in some sense crystallized a need for reasonably comprehensive environmental cover?
Yeah, look, we had a customer recently who was caught up in the asbestos in mulch issue, which was well publicised in relation to the WestConnex project. My customer was actually building a public building out in Western Sydney, wasn't using that mulch provider, but the community was not particularly happy with this building being put there, particularly some people in the community, and they believe that somebody has thrown some asbestos in the mulch around that building, causing a significant loss. The principal immediately called my customer and said, "This is your problem. There's asbestos in the mulch." And it appeared that it was just in one small area where it had been distributed. But nevertheless, because of public sentiment and what was going on in the media, that client was up for well in excess of $150,000 to clear the old mulch and replace it. And at that point, they were uninsured.
Wow. And so that was a result of foul play, more or less. It wasn't because they actually bought asbestos-filled mulch.
That's what they believe, yeah.
Can you, where's that at the moment? Are you able to give us any more details? That's an interesting one.
To just preserve their reputation, they went in, cleared all the mulch away and replaced it. They couldn't risk the community backlash and the media and it wasn't publicised well, and it wasn't publicised at all other than in local media. They couldn't afford for it to blow up, so they just took the cost and went in and fixed the problem.
So, and generally from what you've both been saying, it sounds like that sort of thing would not usually be covered by an insurer, even if they had coverage. Is that right?
Yeah, well, Andrew can talk to the specific coverage, but under a general liability, there's no property damage there. This is just, at that point in time, was just a discovery of an asbestos, which under a general liability policy is completely excluded anyway.
Andrew, maybe you can respond on that one a little and walk us through an example you might have.
Yeah, example there, if you have an order for a cleanup on your site, no matter, I suppose, how it's happened, whether it was caused by you or someone else, it's on your site, you're liable under law, so you're liable for that cleanup. So which would be covered under an environmental liability policy. In most circumstances, obviously to cover myself, subject to terms and conditions, but in that scenario, yes, it would be covered. There are a lot of recent examples. I always like to go back to an older example, which really, I suppose, highlights the gaps in the policy. And it's, probably 20 years ago, there was a large chemical factory fire up in Queensland. The client was the property owner. He leased the site out to a chemical manufacturing company. It had a very large fire. The fire brigade came along, as it did, put water to put the fire out, which it did. Contaminants mixed with the fire water ran into the groundwater. It went off site as well onto adjacent sites, and this resulted in a cleanup on roughly $18 million to remediate the site and clean up. This is the pure cleanup of the land and adjacent land. The third party went broke. That was a chemical company. They probably didn't have enough insurance as well. So the property owner was ordered to clean up the site and was ordered to pay the $18 million. Now they went to their property policy, which declined to cover them for the land. So the property owner was liable for that. They also declined to cover the third-party liability aspect because it was an order from the EPA to clean up the site. So there was no third-party claim at all. So this highlights the need for environmental liability cover, including for environmental incidences, including fires, because requires the EPA or the regulator to be notified, thus resulting in orders for third-party, not third-party scenarios.
I expect it demonstrates that, and I imagine this is also playing into property transactions, M&A deals, and influencing the investors behind those. Are you finding that, buyers and lenders are now demanding more environmental due diligence and this sort of cover because of that?
Yeah, definitely. It's a massive market in Europe, and we're slowly seeing it emerge and the requirements into Australia. We're not seeing the requirements typically in every deal. It's more around the hazardous sites where former petrol stations, chemical manufacturings or heavy manufacturing or waste sites. We're also seeing an increase for environmental due diligence. But unfortunately, once a client has completed, and it shows up there are minimal issues, they don't normally have a requirement to take out the environmental policy. The issue is that these reports don't always have 100% assess 100% of the site, and they don't always identify all the contaminants in there. So there still can be gaps in the reports. They come, and this is what environmental policy can cover also, particularly as it can be a costly cleanup if there is a gap and a new contaminant is identified.
Jonathan, what about you? Are you seeing more demand for environmental liability cover in the deals you're seeing?
Yeah, absolutely. I mean, we have a practice that deals exclusively in mergers and acquisitions, and there's no doubt that sellers are being required to provide some indemnity around environmental and contamination, and buying an insurance product around that. We're seeing that more prevalent in the last 12 months. Particularly with the brownfield development sites that are coming on the market. We unfortunately, a lot of the land that is being redeveloped into apartments in Sydney is ex-industrial land. We're also seeing, where we've had customers purchasing large tracts of land out of Marsden Park and those areas where, they think it's a farm. What could possibly go wrong? But anyone who knows farmers know that in the past, farmers used to bury all their stuff in the back corner of their farm, right? So, we have seen definitely a requirement from purchasers to try and cover that indemnity either through a contractual indemnity or an insurance product.
What you both specialise in has been very specialist for quite some time, but it's really coming into focus now for generalist brokers because of what you're describing, Jonathan, this redevelopment happening around Sydney, and including on farmland where there could be these risks. For a generalist broker watching this, are there some red flags in a client's operations that you could signal that you think should trigger some sort of conversation about environmental liability insurance cover?
Yeah, absolutely. I think it's underappreciated what the definition of pollution is, and people think about PFAS and asbestos and think I don't have that exposure, but I'm sure Andrew's got some great examples of noise and dust. And I think there's a story about a milk truck crashing in a river, which caused a significant incident, which people just don't think about. So it's really important, if you're not an expert, to really look at what your client does, where they operate, what premises they own, and really have a deep understanding, because I think there's no doubt that most customers have a need for some kind of environmental liability, and they either need to manage that or buy an insurance product to do it. I've also found, because of the specialist nature of this product, that the underwriters are very well versed on what the product covers, and normally have great war stories. If you pick up the phone and speak to a specialist and say, does my client have a pollution exposure, they're generally going to be able to give you some reasons or some things to talk to your client about, and they might decide they can manage that exposure. But really, it's about understanding the risk first and then seeing how your customer might be able to manage that.
And Andrew, can you tell us this war story about the milk truck and some of the red flags you think should signal to generalist brokers they need to have a conversation about environmental liability?
The milk truck basically was a truck rolled over into a creek, and the milk gets into the water, and a lot of people don't know that the milk takes the oxygen out of the water. So it kills all the fish and the plant life within there, and the environmental impact it can have on the river. And again, that's probably an add-on of the liabilities, that increasing environmental liabilities that clients can have is dealing with cleanup of natural resource damage and those types, which can be quite complex and lengthy, given it may take 5-10 years to get the river back to where it was prior to the incident, which is what you're liable for as a polluter. And to go on, to help with the sell, clients often say they have never had a pollution incident, or it didn't cost them much. I think if you go through the change in regulation with them, have they improved their environmental risk management? If they haven't, then there can be gaps there that they can be liable for. Review the gaps in the traditional covers as well. And in today's world, the cost of the impact is a lot larger than it was probably 10, 20 years ago. And as Jonathan said, looking into where's the business located? Is it near a river or a creek, next to a school? And what your impact is as a business you could have, even from a fire, could have on the adjacent sites, and also being aware of what those sites do, and the impact it could have on you as a business as well, should they create a pollution incident, and ensuring you have a sufficient cover. Also with waste, what do they do with their waste? Where do they store it? And most companies generate some form of waste that comes in food, metal waste, anything that can potentially have an impact on the environment. Where are they storing them? How are they containing them? How often are they checking them? These should open up some conversations to how environmental insurance can assist, and the importance of specialisation to eliminate the gaps from the traditional policies.
Andrew and Jonathan, thanks very much for your insights, and thanks for watching Insurance Business TV. Bye for now.